Yeah, hello and welcome to another update video about the NASDAQ. Few of you asked me if we could take a look at the price action longer term, like from the 2022 lows. And yes, we can take a look. There are a few different interpretations that are possible there. I'm leaning to the idea, and that's a similar wave count to the S&P 500 that we're also covering. And in this scenario, you can see it down here. This is a pretty clear three-wave move to the upside down here. Yeah. So it makes sense. The initial move up from the October 22 lows here at around 2,500, where we started to see this as a three-wave move. And that makes sense in the context as an A wave of a larger ABC. Then a B wave dip and a C wave rally. Basically here ABC, which is forming a wave 1. It's the first wave of an ending diagonal because this is basically the last leg in a long-term uptrend. It's a fifth wave, and the fifth wave can be a diagonal. So we have a wave 1 to the upside, then here a wave 2 pullback, which bottomed here in March 23. Then the wave 3 to the upside, which is also an ABC structure. That's the third wave, which topped here in July last year. Then a WXY structure in a wave 4. And this is now the wave 5 to the upside, which is also an ABC structure. And there are different ways how this can be counted. It's a bit messy because the microstructure, we didn't really get any significant pullbacks in this entire move up. From the, sorry, there's a dog in the background, from the October 23 lows. We didn't get any significant pullbacks. And that makes the exact micro counting of the move from the October 23 lows a little bit difficult. But it should be an ABC structure because the entire move up is an ending diagonal. Because it is an ending diagonal, it might appear very bullish at the moment. Okay, it might appear very bullish at the moment. That is what diagonals do. They seem very bullish. Yeah, it's like a disguise, whereas actually it's a pattern of exhaustion. And yeah, it's just worth to understand that as soon as a diagonal finishes, and I don't think we've reached the top yet, but as soon as a diagonal finishes, you normally look at a very sharp pullback. All right. Now, how can we, is there a way to determine a possible target for wave 5? I mean, yes, with fibs, but also one way is, for example, we can see where we get to connect waves 2 and 4, add that line, so copy it, add it to the third wave top, and then it is sometimes the case that in these diagonals, the wave 5 reaches the upper boundary line of this trend channel, might reach around about 19,000. Yeah, we'll see. This is at the moment based on the trend line only, but the fibs, I think, speak a similar language. So also on the SPX, I'm still looking at a little bit higher, but I think then we could have a more substantial top in place, which could form a long-term uptrend top. And then we're looking at either a really strong bear market, or at least, I mean, if I'm wrong about the idea of a bear market, which I hope I am, then, I mean, this is a 5-wave move up, right? So that means at least, even if we count this as an extension higher, and this is a wave 1, then at least we should get a wave 2, which would also be a pretty deep pullback, but should obviously end above the October 22 lows. That would be a nice pullback, and then we can look at further continuation higher. But either way, I think we're getting close to a long-term top here. So now let's take a look at the price action from the 2023 lows. And I'm leaning here to the yellow wave count. Obviously, as I said, it's an ABC structure, A wave, B wave, C wave higher. Again, that's the best I can offer. There are surely other interpretations here, but I have to count it as an ABC because it's part of that ending diagonal. Yeah. In an ending diagonal, we have 5 waves, and each of the waves is an ABC structure. So also the fifth wave has to be an ABC. There's one scenario where we could still come down in a larger B wave before continuation, but as long as micro support levels are holding, and to be honest, the last 3 did hold nicely, so we're climbing up the stairs nicely here in our trading areas, trend reversal areas. As long as they are not breaking, I'm looking at higher mode directly, all right? So the idea is, yeah, we have an A wave, a B wave, and now the C wave in the making. Now zooming in a little bit, you can see that from this B wave low, we had a 1-2 setup. We're now likely in that circle wave 3, which started on the 5th of January. We had here a nice reversal. Then within this third wave, which should be a 5-wave move, we had a wave, wave 1, wave 2, which bottomed in our next reversal area, a third wave of a third wave. Topped exactly where it needs to, round about the 100% extension of the wave 1. That's common. Then we have a wave 4, which was deep, but it never break below our support. So we talked about that support zone in the last video. Reversal in the support zone, and we could now be in this 5th wave. I'd like it to extend a little higher, minimally to, it would be good to 18,087. So 18,090 would be good. Better would be 18,304. Let's see. This could be a small 1-2 setup here. I haven't labeled this, but then, yeah, this could extend a little higher in the coming days. We'll see. The condition is obviously that the 31st of January low isn't broken, because that would be the invalidation point. If I see, it's, as I said, it's possible that we have a small 1-2 setup there. Like here, wave 1, it's 5 waves up. 1 second, I have to change the wave degree and color here. Going very small now with the wave degree, but it's possible that here on the 31st of Jan, we started a wave 1 to the upside, a wave 2 pullback here. And yeah, as long as, this support zone will be relevant again. Okay, if we go a little lower maybe in this wave 2, but the third of a third should then send us higher. Then there should still be another 4 and 5. That would be ideal, stretching maybe to 18,300. I think that would be my ideal target here. That's a typical target for a third wave as well. And then obviously looking at the microstructure, depends on where the wave 2 bottoms, right? But as soon as we now get a break above 17,770, I think we are looking at the third wave rally here. Yeah, and obviously what happens below 17,220, well, I would then start to assume that we might be in this deeper B wave pullback, which is just a different way of looking at this entire structure, which is not bearish, but it allows for another pullback. We would only have 3 waves up. So I'm looking at A wave top from the October low, then an A wave down, an overshooting B wave, and we might come down in wave C. We don't need to go down that low though, because with an overshooting B wave, the C wave can end above A. So we would then need to recalculate targets, but this is a standard support area, still relevant. And then we can go up from there, but that would be my alternative. Because the upside move is technically not yet complete. There are a few squiggles missing, really. So yeah, I'll keep you updated. Hope you liked the update about the NASDAQ. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our stocks and S&P 500 service. You'll find a link in the description. Thanks a lot for watching. Bye-bye.